Well, and you've nailed something that analysts have highlighted, which is the market share loss for Aurora. So not just an overall market decline, it's actually specific to ACB. Fortunately, we've got the CEO with us, Miguel Martin, and we can ask him, starting right there, Miguel, that is of concern. Analyst after analyst today, as I know you've seen, saying you're losing share on the recreational side. What do you tell them about that?
Well, I think, first and foremost, thanks for having us. I think you have to look at cannabis in the totality of it. Aurora as a company has four key parts of its business: the domestic medical business, with which we're number one and grew our market share about 2x our next closest. International, we had a great year in big markets like Germany, UK, Poland, Czech Republic, and got 3 of the 9 tenders in France. Science and genetics in our US CBD business are doing well. The rec business in Canada was a challenge, for everybody. We saw COVID disproportionately hit Canada with store closures, curbside delivery, and so there definitely was, a lot going on there. I think, what I would say to investors is you have to look at the totality of a company and the diversity of a company. It's hard to predict exactly in these early innings of cannabis where we're going, but when you have medical margins in the 60s, I think there's a lot of opportunity for us to see benefit in the medical business, and definitely our rec business will get better.
Well, let's get to that because, you do have leadership in the medical domestic side. You have about 20% market share in exports. You have a 25% market share, according to some analysts. The real problem spot was recreation. So I wonder if you sort of triple down on the medical side of it, does it make you a candidate to sort of be bought, to be taken over by other companies, pharma companies, for example, that are looking for a leg into this space?
Well, I think strength in medical is good for a lot of reasons. There's tremendous synergies and efficiencies with the rec business, manufacturing, packaging, science, IP, and genetics. But on the medical as a standalone, we are extremely bullish. If you look at most markets and countries, you start with medical and then you transition into rec, which is one of the reasons why we're so bullish on our opportunities, in the U.S. As the #1 medical company in the largest federally regulated medical market, we think that's a huge advantage for us in the U.S. You couple that with genetics, IP, our announcement on biosynthesis, and I think it is compelling. Whether that's compelling, as a target or compelling as a standalone company, I think there's a lot there for investors to be appreciative. I understand the questions about rec, but there are a lot more aspects of this business than just the short-term COVID impacts of the rec business in Canada.
We do know, though, analysts will want some clarity on your path to positive EBITDA. They're going to want to know about premium flower grown at your Sky facilities. What are you telling them about that? Presumably those two things are linked. Higher margins gets you to profit.
Yeah, it's a great question. So if you look at the history of the company, it has historically, when we've talked about efficiencies, been able to deliver them. We announced in this earnings release $15 to $20 million of incremental net efficiencies per quarter that will happen in 18 months. We absolutely expect to be able to hit that. And with that, with no growth to revenue and no change to margin, the company would be EBITDA neutral, which would be a significant point of differentiation from our competitors. In terms of the premium business in Canada, we've made significant investments, millions and millions of dollars of investments in potency and quality of our products. And while COVID delays the impact of that, we clearly expect there to be impact from the consumer side of it. So we think the combination of the efficiencies plus the changes we've made with a strong medical business puts us in a great position.
So Miguel, what I'm hearing then is maybe it's okay to lose the market share in recreational, like you don't need to fight tooth and nail for that. I mean, am I reading you right?
I think all market share points are not created equally. So if you think about, value flower in which you'd have a really low margin versus higher margin, premium brands or other items, there definitely is a difference. We are much more focused on a percentage of the profit pool than we are with overall market share. Today, you're seeing market share move 200, 300 basis points in a week, and so it's very volatile. I think the long-term trends of profitable market share, premium brands, Gen 2 products with higher margins is really, where you'll see sustainability.
But to that point, you are at the moment losing market share and don't yet have that premium flower to offer. So I guess it's really the path that analysts want to see. It's been a bit of a show-me situation for a while. Miguel, you must get the question, when are you going to be able to deliver? When's the quarter when you say, here it is?
Well, I think, what I would say to that is we've made the changes. If you look at the changes in our potency, if you look at the efficiencies we've announced, if you look at the success that we've had in over 12 countries, I understand the question on rec, but that is not an Aurora specific issue. You have provincial inventories, cut in some cases by a third. You have stay-at-home orders. You have, curbside delivery. And so I get that. We will see the market share in the upcoming quarters. I think more importantly for shareholders and I think for analysts, if you look at a broad-based, successful business across the 4 key areas, we think Aurora is that. Mm-hmm. And I go back to the previous point, with the efficiencies, we expect to be EBITDA positive in 18 months. That is a point of differentiation to our peers.
Miguel, I mentioned earlier to Amanda that in Massachusetts, where I have a house, there's like lines around the block for certain dispensaries. How do you get into the U.S. market?
So right now, we're precluded to being in the U.S. market as we are traded on New York Stock Exchange and now going forward in the NASDAQ. We fully expect that there will be alterations either to the SAFE Act or MORE Act, and for us and the other Canadian LPs. And so we believe that's going to open up. In the absence of that, there are other plays, and whether it's through science or genetics or technology or different aspects that we have, we clearly think will be there. There's no question the Canadian LPs are going to play a large role in the U.S. business. I mean, President Biden has been very consistent saying decriminalization and medical would be the federal standard. I also believe the FDA is going to play a large role in regulated cannabis, and our years of successful navigation of Health Canada and Germany and other key markets around the world, I think gives us a huge advantage at the time in which you see federal legalization of cannabis in the U.S.